By now, you would have probably heard that Warren Buffett is buying Oxy up to 50% stake. So, what does it entail? Right now, Berkshire Hathaway commands a 20% stake in Oxy after a series of transactions, and he is now getting the permission to buy up to half of the company, further boosting the shares. And in an interview with Warren Buffett, he mentioned that the Occidental bid is a bet on oil in the long term. This means that Warren Buffett is bullish on oil prices for the long term. And Motley Fool also wrote an article about how Occidental Petroleum isn't your average oil company. So with that said, right, so let's take a look at why is this company so favored by Warren Buffett, and is this a buy or sell after a 800% jump in share price over the past 2 years? So before we get started, just a quick disclaimer. Okay, the presentation is for information purposes only and does not constitute to any financial advice or recommendation. All right, please make your own independent evaluation and do your own due diligence. Okay, so let's kick off Oxy stock analysis. So first of all, we will look at what they do. All right, so Oxy is a combined integrated portfolio comprising of three main business segments. So the first one is of course the oil and gas production. The second one is OxyChem, which is a leading manufacturer of basic chemicals. So later on I'll touch more on that. And this is an important part because it's actually a very lucrative uh, division, right? It does generate significant cash flow. And the third one is Oxy Midstream. So midstream refers to all the infrastructure, the oil pipes and everything for the company to transport crude products from one end to the other. Okay, so zooming in into the oil and gas business division. So for the third quarter 2022, okay, the company produces around 1,140 million barrels of oil per day. And out of that amount, the Permian Basin commands more than 50% of this total oil and gas production. As you can see from the uh, highlighted portion over here. So just the Permian Basin alone, they produce 500 plus million barrels per day. Okay, and if you were to look at this chart, okay, taken from the Oxy's corporate presentation, okay, Oxy is the leading operator in that region. So based on the 6 month accumulative oil or 12 months accumulative oil, Oxy is more than 25% above the average compared to all the peers listed here, but they have covered the names in order not to, name shame them and things like that. Okay, so the takeaway here is that Oxy is the leading player in this Permian Basin. Okay, and moving on to the OxyChem, right? Their second segment. So you can see from here that they produce this chemical called vinyl, okay, or it's also called PVC. It is the world's most versatile plastic since it can be used in both rigid or flexible applications. And on the left hand corner, you can see the principal users of vinyl are a whole lot of them, okay, going from like bottles, electric cables, flooring, furniture, pipes, even plastic toys. So PVC is a very flexible thing that comes, is a byproduct from the oil and gas production. The third segment, which is the midstream one, all right, just a quick background, the oil and gas industry is divided into three major components: upstream, midstream, and downstream. So for Oxy Midstream, all right, it involves the transportation, storage, as well as the marketing of all the refined petroleum products. So like this is right after they produce and now they want to transport it to other places. Yeah, so this is where this business segment will come in. Okay, and as a snapshot, the whole snapshot based on the net sales as of year 2021. Okay, so you can see here that the oil and gas production commands 73% total of the total revenue. Okay, 18.9 billion compared to 25.9 billion. All right, so essentially, Oxy's fortunes are tied very closely to the fluctuation of oil prices. All right, so now let's move on to the bull case. So, why is Warren Buffett so fascinated in Oxy that he keeps pumping his stake into this company? So, first of all, okay, let me shift my. Okay, so first of all, Oxy has a strong cash generation. Okay, and in the past year or so, right, because of his acquisition of Andaco Petroleum. So they have to take on a huge amount of debt. And what happens is that after that, they are able to generate free cash flow and they use it to pay off their debt. And based on first quarter 2021 to second quarter 2022, they generated a free cash flow of 16.3 billion. All right. And they retired their debt worth of $14.9 billion. And moving on, the company's focus is to increase return of capital. So return of capital meaning they're going to do share repurchases as well as drive the dividend growth. And as for the debt, right, they're going to just retire the debt as the maturities come due. It means if the debt maturity date is 2 years from now, they will wait until the 2 year mark and then they will pay off the debt. So this is what they're going to do to increase the return of capital and shareholder returns. Okay, and another catalyst or like positive trait about Oxy is that OxyChem has a market leading position in the world. Okay, it is the top tier global producer, largest caustic soda seller, largest VCM exporter, and this segment itself generate a lot of positive free cash flow. I can see from the top right hand corner about the pre-tax earnings, they have a full year guidance um, that is way above the past 10 years. So that is like a record year and is as at least 2.4 billion okay earnings pre-tax. You can see from the profitability drivers, the chemicals prices are going up as well, maybe in tandem with the high oil prices. Okay, and the last one is about the whole ESG thing, and Oxy is not just gonna rest on its laurels. They have in fact targeted to shift it to net zero by the year 2040, if I'm not wrong. All right, and what they have done is that they have manufactured this world first million ton direct air capture plant. Okay, and this is their first step to meet net zero goals. Okay, and this whole project is being financed and developed by their subsidiary Oxy Low Carbon Ventures (OLCV), and it is also located in their main region, the Permian Basin of US. So we have to talk about the management team because that's the possibly the main reason why Warren Buffett is so hyped up about this company and willing to invest such a big amount of money into Oxy itself. So there are four main reasons why Vicky Holub is the right CEO. Okay, So first of all, she has a long 30 plus year experience working in the Premier Basin. And she has worked from the ground up, right? From like a drilling engineer to the area vice president for Oxy. And she has, she knows all the ins and outs of the oil and gas production. And more importantly, she is handpicked by the former outgoing Oxy CEO to take the helm of Oxy. And last but not least, she went over to Berkshire Hathaway and talked to Warren Buffett, and she managed to convince him to lend the company $10 billion to seal the deal with Anadarko Petroleum. So what seems like a bad deal in year 2019 because of their acquisition, all right, they have to pay a lot of money to acquire this similar size company, uh, and then COVID hit and oil prices plummet. But after 2 years post COVID, this acquisition is bearing fruit. So they are more so called even closely tied with high oil prices, and as a result their turnaround is remarkable, right? And now let's talk about the bear case. All right, we have the bull case. Now let's talk about the risk involved. So as everyone knows, oil prices are the equivalent of demand and supply. And if we were to look at things right now, okay, China is probably facing, a housing bubble, and it's already bursting. All right, and if it continues to spread or be contagious throughout the whole country, because it constitutes to a 30% GDP of China, their oil demand may come to a stop. And when demand slows down, right, the oil prices will come down as well. And in fact, okay, the EIA, okay, Energy International Emission, if I'm not wrong, right, they are already forecasting the spot price of um, the West Texas Intermediate or WTI crude oil and Brent crude oil prices to come down in year 2022 and 2023. So you can see from the highlighted portion, they're expecting the Brent crude oil prices to come down from 104 to 95 per barrel. So that's like almost a 10% drop in the oil prices, even before factoring into the China recent housing bubble and things like that. Okay, and next is if you were to look at it, right, the share price has saw 800% in less than 2 years. Mainly, well, I would feel that is mainly due to the Berkshire boost. All right, so with people coming in to with people jumping into the positive market sentiment, there may be cases whereby it's currently overvalued, or at least it's too yes jump too high, too fast, too furious, right? And there may be chances of a pullback. Okay, and if we were to look at this right here, all right, Berkshire has not crossed the $60 mark even throughout the series of purchases in the around 3 months time. So from June 23, right, they bought at 55, and then August 8 they bought at $58. So they haven't crossed the $60 mark, and right now the share price is already 70 plus dollars going to $80. So that is like a near, I would say, 25% jump from here. So we as investors, we have to be careful, all right, and not to just jump onto the bandwagon just because Warren Buffett is going in. So he may have the discipline to wait for the pullback to come and things like that. But we as investors, we as retail investors, we may not have the patience or the money to do that. All right, so the next one that I want to talk about is the peers of Oxy plus the valuation comparison. So now let's look at the five companies. All right, so Oxy, right now I'm comparing it to EOG Resources, Chevron Corporation, ExxonMobil, and Sonoco Phillips. All right, so all of them are in the energy sector, and they are also in the same similar industry. Is either integrated oil and gas or oil and gas exploration and production. So among the whole list over here, Oxy is actually the smallest. All right, it has a market cap of 69 billion. Okay, compared to ExxonMobil is $412 billion. So that is like at least another 5 to 6 times more. Okay. Okay. So now let's look at the balance sheet. So balance sheet, um, they have a total debt to equity of 84%. Okay, 84% as compared to the rest of the peers, which is quite comfortable at 33% and below. So in this scenario, the balance sheet wise, Oxy is you know has certainly a higher leverage as compared to the peers. But if we were to look at the debt to free cash flow, right over at the bottom part, okay, this is where they are quite similar in the sense that because of Oxy's um, very what I would say strong cash flow generation, using that debt and you divide by the cash flow generation, it's only a four times, right? 4.2 times compared to EUG 5.6, or even the Chevron Corporation with 4.28. So in this aspect, um, it is somewhat a decent debt to free cash flow, right? So highest net total debt to equity, but decent debt to free cash flow. And let's talk about the profitability. So profitability, their income margin, all right, their net margin of 32% is way above the rest of the peers. Same goes for their free cash flow margin as well as the return on equity. So they are off the roof here. Return on equity is 47.8%. Okay, so this is an important barometer of Warren Buffett. So he loves companies with high ROE, and Oxy, in this instance, right, commands a 47% ROE. Okay, way above the rest of the peers. And now let's talk about growth. So growth, Oxy has a revenue 5-year CAGR of 24%, also above the other competitors, and a net income 3-year CAGR of 42%, almost almost three times that of the EOG, or 50% more than ExxonMobil. Okay, so their compounded annual growth rate is the fastest. All right, so now on to the last segment. So what should we watch out for Oxy in future? So in my perspective, post COVID, right, post maybe the interest rates environment, and once recession is gone, climate change will come back to be a main topic again. So everyone will be talking about the extreme weather. Our whole earth is getting hotter and increasing 1 degree Celsius every year, things like that. So climate change will be a very sensitive and major topic. And because Oxy is an oil and gas production, and naturally in turn they generate significant those carbon emissions, and Oxy has set a pathway to net zero, right? Year 2040, net zero emissions in their operations and energy, limited use scope, and years 2050, net zero for total emissions inventory. So they are very clear and they have set a date to reach a certain milestone by a particular date. Okay, and more importantly, they have demonstrated the first step by building this direct air capture facility. So this is what is being done at this moment to help accelerate their pathway to net zero. So this is I believe this is an important part that we as investors or as long-term investors, we should take note of. Okay, so the question that we may need to ask is, can Oxy maintain their lead in the net zero goal? So because all the other oil companies are also promising the same thing, but can Oxy take the lead? So this is a very important question to see whether they can stand out from the pack. Okay, so with that, we have come to the end of our presentation, right? If you want more stock analysis, please help me like, okay, and subscribe to the YouTube channel. I will appreciate you to just, all right, leave down the comment below for any of your preferred stock that you want me to go through, and I will do my best to help analyze that stock. So with that, thank you everyone. See you in the next video. Bye.